Welcome to the Explainer. I am absolutely thrilled to be hanging out with you today. Okay, so we're jumping right in, and we are taking a deep structural dive into what has to be one of the most wildly fascinating and honestly completely volatile projects in the decentralized tech world right now. We are talking about the AI network Bittensor and its native token, TAO. We've got a lot of ground to cover, from some extreme market drama to the underlying tech and a massive evolution that's happening right now. So, to really get a grip on where we're at right now, we have to talk about a pretty brutal number. We're looking at a staggering 67% drop from the all-time high of $767 that we saw back in April of 2024. I mean, ouch, right? For a lot of folks watching from the sidelines, a crash that severe immediately begs the question, is this the end of the line for the supposed king of AI crypto? Or are we just watching the really messy, painful evolution of something totally revolutionary? Section 1. The Bitcoin of AI. Let's dive right into this foundational concept. Back in 2019, co-founders Jacob Steves and Alice Shabana set out with this specific vision: to build the Bitcoin of artificial intelligence. And to understand why that's a big deal, just think about how AI works today. We mostly have this highly centralized Walmart approach, companies like OpenAI. It's a giant corporation building and hoarding intelligence behind closed doors. Bittensor, though, it's structured more like a decentralized farmer's market. It's an open, peer-to-peer network where thousands of independent computers actually work together to collaboratively train machine learning models. And they don't just use the Bitcoin of AI label for marketing. They literally hard-capped the supply at exactly 21 million tokens, just like Bitcoin. But here's the twist. Instead of proof of work, the network uses a mechanism called proof of intelligence. It directly rewards the contributors with newly minted TAO tokens based entirely on the informational value they bring to the network. Section 2. Inside the subnet brains. Let's break down exactly how this decentralized intelligence actually works under the hood. So instead of having one gigantic, clunky brain trying to do everything all at once, Bittensor is split up into over 100 highly specialized subnets. Think of them as individual mini-brains. Each one is laser-focused on a very specific task. We're talking everything from predicting stock prices or folding proteins, all the way to detecting deepfakes or generating images. And the way these subnets operate, it's basically a ruthless reality TV show. You've got miners, who are the contestants running their open-source AI models. Then you've got validators, acting as the judges. They literally stake their own TAO as collateral to score the miners. You also have subnet owners, the designers who actually invent these AI competitions. And finally, delegators, who just passively stake their TAO behind the validators. It is quite literally Darwinism for AI. If a miner doesn't perform well, boom, they lose their entry fee and they are kicked out. But the top performers? They're basically printing TAO emissions. Section 3. Anatomy of a crash. Because as we all know too well, having brilliant architecture doesn't magically protect you from the realities of the market. Just look back at the first quarter. The token went on an absolute tear. It surged over 160%, rocketing all the way from $144 up to $375. This hype was totally fueled by $43 million in network revenue and just massive excitement over a Grayscale ETF filing. But man, did the floor fall out quickly. In just one brutal single-session drop, $81 in value was wiped out per token. The price practically free fell down to the $260 range, just instantly vaporizing a huge chunk of all that Q1 optimism. If you zoom in on the objective technical data, the warning signs were literally flashing red. That TD sequential indicator, the exact same one that predicted the massive rally, yeah, it actually flipped to a sell signal, pointing right at profit-taking exhaustion. We also saw bearish setups, like a Golden Cross CMA aiming at a $200 target, and Fibonacci retracement ranges hinting at a nasty 45% dip down to 144. Throw in a massive 1.7x Bitcoin volatility multiplier, amplifying the downward pressure, and, well, this technical breakdown triggered a staggering $11.83 million in futures liquidations. Section 4. The decentralization theater, because, technical charts only ever tell half the story. The real catalyst here was a severe internal governance crisis. We absolutely have to spotlight this specific phrase from Covenant AI. They publicly called the entire network decentralization theater. And keep in mind, Covenant AI was not just some random player.
They were the network's top subnet builder. Their 72 billion parameter model had matched Llama 2 and had even earned public praise from tech giants like Jensen Huang.
So, when Covenant AI announced a complete exit from the ecosystem, it was a massive blow, and they left behind a trail of explosive, largely unanswered allegations. They claimed the network suspended their emissions, totally stripped their moderation rights, deprecated the underlying infrastructure they relied on, and they even accused the founders of perfectly timed token dumps. Now, regardless of where the actual truth lies in all of this, the mere presence of these allegations absolutely destroyed investor trust. It completely overshadowed any of the positive buzz from that ETF filing. And honestly, the timing couldn't have been worse, because market sentiment took another massive hit from a totally separate incident, the Sam Dare situation. This reportedly involved a $10 million hit connected directly to a subnet owner. It was basically a domino effect, triggering this frantic wave of defensive alpha selling across the ecosystem as people just panicked to protect their bags. Section 5, the Dynamic TAO upgrade. Let's move on and see how this builds. Because while the price was crashing, developers were quietly pushing through a massive structural rebuild. This is the February 2025 Dynamic TAO upgrade, or dTAO. Now, before dTAO, just 64 validators controlled literally all the token rewards, which of course fueled those exact complaints of centralization we were just talking about. But after this upgrade, any TAO holder can stake and vote on subnets. They directly address the centralization crisis by stepping back and letting the free market of token holders dictate exactly which subnets actually deserve funding. Now, what's really interesting about this is the incredible resilience of the community itself. Because despite all that panic selling and the barrage of negative headlines, strong on-chain accumulation just kept going. Right now, an unbelievable 67% of the entire circulating supply, that's over 7.28 million TAO, is still locked up and staked. That is a ton of users who clearly still believe in the long-term vision of this project. Section 6, the future of Bittensor. So, where on earth does all this leave us? Let's take a look at the future catalysts the market is watching for. The network has laid out this incredibly ambitious 2026 expansion protocol. Step 1, they want to double the amount of specialized AI models, scaling up from 128 to 256 subnets. Step 2, they're aggressively targeting institutional capital, specifically securing inflows via the Grayscale Fund and through entities like Barry Silbert's Yuma. And step 3, which might literally be the most critical, they desperately need to bridge the usability gap by creating actual consumer-facing apps. So the crucial point is keeping a close eye on these specific upcoming milestones. In the near term, we've got the Conviction Protocol update rolling out, which is designed specifically to stop those trust-shattering rug pulls. Looking at the broader macro trigger, a lot of traders are waiting to see if Bitcoin dips below 70K, as that could activate a massive $208 limit buy zone for TAO. But the absolute monster catalyst, that's the first TAO supply halving coming up in December 2025. Analysts are already calling that event a long-term bullish time bomb. All of this brings us to one final provocative thought. The underlying technology here is undeniably revolutionary, and the tokenomics are hardwired for absolute scarcity. But let's be real. Right now, it is still incredibly complex for the average person to use. So I'll leave you with this question. Can Bittensor fix its clunky user experience and finally evolve from a highly complex developer playground into a true mainstream product before a competitor swoops in and steals the crown? Thanks so much for joining me for this explainer, and keep learning.